When you're looking to win your trades more consistently and actually finally become a profitable trader, it can feel kind of like a lost journey, if you will, because you're going to get on YouTube, you're going to go wherever you can and start searching for these strategies. And everywhere you look is a new secret strategy in order to become and stay profitable. You're going to follow these indicators, you're going to follow SMC, you're going to look at technicals, and it feels like an endless battle to consistency. It's something that you'll never reach because most likely the answer is that you're focusing on the wrong things and you're just looking at this RSI indicator, or you're looking at this Fibonacci level pullback, or you're looking at SMC strategies, which is really just regurgitated technical analysis using different words. Trading by just looking at trend lines and looking at charts and RSI indicators or fibs and just focusing specifically on indicators is really the reason why the majority of traders are failing in the markets. And you don't want to be the majority of traders. If you go look up online, you'll see the statistics are everywhere. Over 95% of retail traders are not profitable in the markets. It is important for things like taking your entries, things like your stop loss placement, understanding market structure. You need to know where the price or where your stop loss is going to be in order to manage your risk, right? So risk management, take profit, stop loss, very important for taking your entries. Now, that doesn't mean that there's no way to understand or anticipate the possible direction or moves of the markets. This is called fundamental analysis, which is the economy. It's understanding the things that drive the markets, how interest rates impact things like gold, for this example, or how interest rates impact the economy, how the labor market or economic data is going to impact the markets, because this is going to fluctuate. And when you have your analysis based on the direction of the market, this is when you can apply technicals. But without understanding fundamentals, you're most likely just trading blind. In the case of the gold trade that I'm going to show you today, this was when Federal Reserve Chair Jerome Powell was anticipated to speak at a press conference. And the markets knew that he was going to talk about monetary policy, which is interest rates. So when the markets know this, there's a pretty good chance that once he speaks, depending on what he says, it's going to move the markets, specifically in this case, gold. My expectations for Powell going into this press conference, especially for trading gold, was if he was to talk about no more rate cuts for the rest of the year, like the next two meetings that they have, they're not going to do any more rate cuts, I would be looking to take gold sells. Gold would push to the downside because this is what's going to be called hawkish. This means that the Federal Reserve wants to hold rates higher for longer. That's going to push gold lower, and that's when I would take gold sells. Now, the inverse would be if he comes out and he confirms more rate cuts. We're going to keep cutting rates. Inflation's fine because the Federal Reserve holds rates high to fight inflation. So if they come out and say, inflation's fine, I'm not worried about it, we can cut more rates this year, that's when I'm going to start actually looking to take gold in the inverse direction, because this would push gold higher. So now I'm going to show you two things that he said that triggered the markets to move at the exact same time that he said it. This right here is a chart of gold, and you can see some of the headlines that Powell was actually saying while he was speaking. Now, starting off with the first headline that actually impacted the markets, if we take a look here.
For a few weeks after the meeting, after we write down the SEP, it's actually a pretty good read on what the thinking of the committee is. And I'll point to, one thing I will point to is that if you look at the path that people wrote down, we had 10 people at 4 cuts or more, or 2 remaining cuts. We had 19 people at 3 or more. But the sense of the committee, this is not a committee that feels like it's in a hurry to cut rates quickly. It's a committee that wants to be guided. Ultimately, we will be guided by the incoming data. And if the economy slows more than we expect, then we can cut faster. If it slows less than we expect, we can cut slower. And that's really what's going to decide it.
The Fed is not in a hurry to cut rates quickly. Remember what I said before. One of the things I'm going to be looking for is what is their forward guidance, if you will, or what are they looking for in terms of interest rates? So the fact that he just said, hey, we're not in a hurry to cut rates. Remember I said I'd still be looking to sell gold based on that because it should push gold lower. If we take a look at the reaction of gold right there, look at the bottom. You can see 2:10 p.m. Eastern time. That's when this happened. And you can see the exact time this headline came out, right? So that headlines, what Powell was saying in terms of interest rates is going to impact gold, and you could have capitalized on these sells as it broke that resistance. It was what he said at the exact same time that made this move happen on gold. The time on the news feed right here, and you can see the time matched right here on gold. This is the exact time when he spoke that impacted the markets. It wasn't because I had a random trend line break or some moving average was broken or an indicator told gold to just randomly drop. It was the economy, it was the central bank and monetary policy that made this move happen. Now, the other thing that he said, remember, he's still speaking. So if we take a look a little further down on these headlines, the next thing he said, and this is honestly one of the risks when it comes to taking trades during a central bank speaker, they can shift the markets very quickly. If we take a look at this headline here.
Well, we will do what it takes in terms of the speed with which we move. But if you look at where we were 2 weeks ago, coming up on 3 weeks ago, I guess, when we wrote down our SEPs and made our decision, it was a situation where people were thinking, the bulk of the committee was at 75 or 100 basis points, and the votes were on 50, and that would mean 2 more cuts. It wouldn't mean more 50s. Now, of course, that'll depend on the data, but ultimately that's what the baseline is. If the economy performs as expected, then that would mean 2 more cuts this year, a total of 50 more.
If the economy moves as expected, that would mean 2 more rate cuts this year for a total of 50 basis points. Basically, he just said we're not in a rush to cut rates, and then in the same exact breath, 2 minutes later really, he said we're going to do a 0.5% rate cut by the end of the year. So another rate cut after he just said we're not willing to do it. This, for me, immediately shifts my bias on gold. And if we take a look at how gold played out, I'll move these headlines off the screen so you can see this. It immediately flipped. And you take a look at this long term, you can see that you were taking those sells short term when Powell made the comments about not cutting rates. But as I'm playing out gold, you can see the real move was taking gold right here, right back to the upside, because he still confirmed rate cuts. But in the short term, he made the comment talking about, hey, look, maybe we won't do rate cuts. And then he said, you know what? Yes, we will. Completely shifted the direction in gold. This is what I was expecting to happen at the meeting. Just because he was at this meeting, I wasn't expecting him to change his expectations or his bias on, hey, look, now we're going to pause rates, we're going to hike rates, because he's already said before, we're willing to cut rates further as long as inflation continues to drop. So of course, once he reinforced the idea or reassured the idea that that's what they were going to do, this just told me that drop in gold is just a better entry to get back in on buys and take it right back up. That's what trading fundamental analysis is, anticipating how the markets are going to move based on things like economic data, important announcements and speeches, and the news. I even said this to my private group, and you can see it right here. While this was actually happening in real time, it most likely won't hold, talking about the pullback as gold was dropping. I'm just monitoring it for reversals. He hasn't said anything hawkish, which, like I said, means hiking rates. Nothing new either, so the pullbacks aren't a surprise. This is how I was telling everyone inside my private trading channel that this pullback on gold was not going to hold. I hope this was helpful. Share this with anybody who needs to know this information, and subscribe if you want to have more content about trading. I'll see you guys in the next video.